Good day everyone, Alice here from Sophie Financial Network. Today we're talking about Facebook. As you know, Facebook just announced earnings and prices slaughtered after hours 20, I believe something about 22% went down on even more. So we are going to talk about what was into earning that gives panic to all the investors or traders. Is it logical? Is it rational? Or it is absolutely emotional. So we are going to take a look at the earning report, and also after that we are going to look at the chart, see what chart tells us. Okay, so before anything, let's go start see what is going on with the Facebook. Okay, so Facebook today, Mr. Zuckerberg just announced earning and missed earning. Expectation was different, just a slightly miss, and after that, missing the earning, then price went down 22%, and it goes to 249, and obviously no one's happy, right? So what is going on exactly with the Facebook? Okay, so let's go deep dive into Facebook area. So here is the revenue, and revenue, as you see, quarter by quarter after quarter for 2019 till 2021. So revenue is going higher, right? So there is nothing wrong with the revenue. Here is the different areas of the Facebook. As you see, US, Canada goes higher, Europe goes higher, Asia goes higher. So if you see revenue beat the expectation, and it is in uptrend. There is nothing wrong with revenue, right? So here is the revenue by geography. As you see, here is I think this is the repetition. Yeah, so here is the segment results, and for advertisement or advertising, Facebook last quarter just beat the previous one and the previous one. So you see this is in uptrend. Obviously another area just a slightly downtick, but in overall, in all the applications, revenue went higher, right? So Facebook or Meta, should I say? So Meta include like a Facebook, Instagram, and WhatsApp. So all in all, if you just name them as a family of apps, you see that revenue goes higher, right? So here is the laboratory or reality lab revenue, which goes higher for the last quarter as well. So the total revenue goes higher as well, and income as well. So income or operating income, which is very important, goes higher, which is operating margin goes 37% last quarter compared to this one, and this one compared to this one. So overall, 2021 was a good year for Facebook. So what is wrong with the Facebook area that everyone just panicking? Just a slightly missed earning because of the expectation. It doesn't mean that Facebook is gonna go die. No, company is doing well. Just expectation was higher a little bit, and everyone just putting like a growth on the Facebook. It doesn't meet the expectation, but it beat itself, like a quarter after quarter it goes higher and higher. So there is nothing wrong with the business. Here's the expense as percentage of the revenue. So I'm gonna just take a look at it deeply into this statement. But as you see, expenses is going higher. There are two reasons. There are two big reasons. One is Facebook is buying back the shares, which is very, very nice and very good for growth companies. When they have lots of cash or free cash, which we are getting into it just a little bit later, instead of paying dividend, they buy back the share. It means the company is doing well and they don't want to lose their shares, because just as a business, you want to invest on something. So when your business is growing, so why you don't invest on your business, right? So they are investing in their business by buying their shares. So that's why expense is going higher a little bit. And also research and development, which is this area, compared to 2020, this one is fixed, but the amount of money is going higher. So percentage wise is the same, but when we are getting to the number, this one is getting doubled almost, right? So this is very, very, very good area. Okay. Net income, you see 2021 was almost better than 2020. I know the last quarter of 2020 just spike up, but overall yearly net income 2021 was better than 2020, right? And capital expenditure, which is another important thing. Annually, Facebook just goes higher. Just this one, almost 30% going higher 2021, and quarterly last quarter of 2021 is more than 2020. Okay, all of these numbers, what all of these numbers are telling us, I'm getting to the deep dive into the detail just later. I just want to give you very, very brief like in a chart or graphical point of view where are we at. And here is the family average revenue per person, which means again revenue per person is going higher. It doesn't go down. So it's not going down, it's not negative compared to last quarter. It is higher. This one is down ticking, but overall 2021 was better year than 2020, and 2020 was better year than 2019, right? So here is the active users as well. So you see the active users is slightly higher, which is really good, right? So the customers, the active users, you can read this as a customer because they're gonna see the apps, they're gonna buy something in marketplace or so. So active users, as you see, quarter by quarter, they're just increasing, right? So there is nothing wrong with the customers. They are not losing customers. Revenues going higher, earnings going higher. So free cash flow, which is very, very important. So look at this, a free cash flow quarter by quarter. I'm not talking yearly because I'm getting to that one, but 2020, 2019 till 2020 and 21, you see free cash flow is going higher and higher. So the company is kind of like tripled compared to 2019. So this quarter is triple than 2 years ago. Is that cool? Like triple. So this is fantastic. This business is running very, very good. So the only concern investors today just impacted, say, Facebook growth is getting to the end and it's going to go down. And we are getting to that one as well. But still, this company is doing well. And 2018, exactly the same thing happened. We are getting to the chart and I'm going to let you know. But 2018 story seems like going to repeat. And here is the so here is the general fourth quarter and full year 2021 financial highlights. And as you see, here's the total revenue. So total revenue for 2021, obviously 37% higher than 2020. This is growth. So the cost and expenses is going higher as well, 34%, but we are getting to that one because this one is important. Why expense is going higher along with revenue? So what happened exactly? So we are getting to that one. Income from operations, which is very, very important. This one 43% higher than last year. So Facebook 43% make more money than last year from operating activities on income from operation. An operation margin, look at that. This one 96% going higher. So this is one time, like based on the tax regulation, but this one is still if you delete this one, these three, these two are very, very good. And also this one, I'm gonna say this is good as well, not just because this is expense, because we want to see which area or where they spend that money. So we are getting to that one as well. All right. Next slide is going to be revenue, advertising, other revenue. So this one you see, advertising, this one is going higher. Other area as well. So everything is getting higher and higher. So there is nothing wrong. Again, total income from operation, which is important for me. So this one is 23,986 million, goes to 46,000 million, which is 46 billion, right? So this is amazing, guys. This is very, very healthy business. There is nothing wrong with the statement. Just the panic today doesn't mean that this business is gonna go die. And I'm gonna tell you exactly what is my strategy. I just want to give it to my subscribers, but to be honest, I just feel like, okay, everyone should know that. There is nothing wrong to just spread it out into internet, and everyone should know that. Here is the free cash flow. The free cash flow from here, 2020. This is 12 months, and that this is TTM or less trailing months. Like for 2020, 23,000 million. This one goes to 38,000 million. And this free cash flow, they just spend somewhere. And where? Here. Here is the expenses. The cost of revenue obviously going higher. But look at this. Research and development. They just invest in research and development almost 70%. So the majority of expenses, instead of paying like for luxurious stuff, instead of paying for, I don't know, something lossless or dividend or something like that, they just buy backing shares and they just put money into research and development, which is great for the business because business is going to run better than before if you just put money into research and development. So you bring like new ideas, innovations. You will be very, very creative for your business. So this is very good. And that free cash flow, instead of just paying dividend or so, or spending like worthless, just putting this one, look at this. And also these ones as well, like these ones going higher as well. So marketing and sales going higher because of the supply chain and those stuff that they explain into like a conference call after the announcement, or general or administrative expenses going higher. But this one is very important, and you see the highlight of the expenses is this one, right? And the next slide is going to be asset compared to liabilities, and this is very interesting. There is no long-term liability here. Look at the liability, and here is the total asset. Here's the total liability. Compare these two numbers. So the Facebook has no long-term debt, and for short-term debt or current liabilities, it's a quarter of their assets. This is fantastic. This is very, very healthy business. There's nothing wrong with the business, and they can just pay off with their free cash flow just immediately right away. So Facebook kind of is like a debt-free. They have no debt. All right. So based on this, I'm come up with a calculation. I don't want to spend the time on the calculator with you. I just want to make a video short. But here's the thing. What's the intrinsic value for Facebook? What's the intrinsic value for Facebook? So net income is 39,000 million. Income from operating activities is 46,000 million. Free cash flow is 38,000 million. So among these numbers, which one is conservative number or which one is less? So if you calculate based on this, you will get the higher intrinsic value, right? So I'm going with this. So this is my number, free cash flow. I'm going to just calculate based on this. Growing rate or growth rate for Facebook based on different analysis, they come up with 20%, like in FinViz, in Zacks, in the Simply Wall Street or so. So they come up with 20% average, right? So for the Facebook in next 5 years or 10 years. Again, I'm getting conservative. I'm going with this, 15%. I just give myself just a little bit safety, 15% growth for the Facebook, which is very, very conservative. It's unbelievable. Like last year, I'm gonna show you something interesting. Here is the FinViz, and here is the Facebook. So this year, Facebook was 57%, and next 5 years, they're coming with 21%. So I'm going with 15%. That's what I'm saying. I'm going with 15%, which is very, very low or conservative, should I say. So based on this and based on the amount of debt and cash flow, so I'm going with free cash flow, I'm going with 15% rate growth. So what's the intrinsic value? Close price today, 2022, February 2nd, after market was 249, yeah, 249.34 cents. My intrinsic value based on the number that I show you is here, 385. So market gives you 36% discount, which is fantastic, which is undervalued, right? So there is no doubt that Facebook in this price is very, very undervalued based on information just announced today. Okay, let's go to the chart. What's the technical point of view? All right, here is the monthly chart, and sorry, this platform, the one that I'm using, it doesn't show, but Facebook now it's here, like a 249, right? So let's put it like a 249. Here's the Facebook price. Let's put it there. Let's clean this Fibonacci as well, right? So here is 249. I'm gonna just put it there, 249, right? So here's the price here in this area, and tomorrow you will see Facebook is gonna gap down to this area. And this is monthly chart, by the way. Here is the 2018 when they say Facebook is going to have lower growth than expected. So market goes down in February exactly. So here is the announcement, February 2018, market goes down, Facebook goes down, and then look at that, what happened after that. And here is like a July 2018, which was a slogan against Zuckerberg, and this one goes down all the way to 50 SMA on the monthly chart. And then going up, here's the COVID crash. Again 50 SMA, rejected in 2 months, and after that big rally. Right now we are coming back again, pretty close to the 50 SMA. And look at this white range bar on the July 2020, just because this one is breakout. So here's the resistance. This candle is breakout, consolidation breakout. And I don't want to get into technical point of view, but here is the Elliott wave, very, very simple. So this is wave 1, wave 2, wave 3, wave 4, which is coming down here. And you see wave 3 have like a 5 wave in structure, and I can count into 5, and here's 1, 2, 3, 4, 5, right? And 5, we then wave 3, and then we are going down to 4, which is above this wave 1, and this is great opportunity for a wave 4, which is here. I'm not sure if we're getting to probably end of this year, but this is the one. And what is the intrinsic value? We just calculate for Facebook, like 375 or so, right? So if we put 375, and here's the color. 375. Okay, so Facebook here's the intrinsic value. Look at that, price just hit the intrinsic value, goes down, and here's the one. So if Facebook is very, very undervalued now, technically this is the end of the wave 4. I don't know how long does it take to go to a wave 5, but this is the wave 4. There is another alternative which is going here, but I'm not going to talk about this. I'm going to talk about this, which is 436, 474 is very, very fair possibility for Facebook to have rally when this correction is happening. So tomorrow I'm going to buy lots of shares here, and even if it goes down more, I'm going to buy back because there is tons of support here. There are lots of supports here. Here is the breakout candle. Lots of institution money is gonna protect their shareholders. And here is this SMA on the monthly chart. And this is very one of the biggest opportunity for Facebook. But because look at that. So when that happens, when shit happens, when a negative sentiment is coming to the Facebook or any stock like this, we just analyze the fundamental behind the stock. Stock is amazing, stunning. The free cash flow, the earning income is, everything is great. So when these negative sentiment comes to the market, just take advantage of it. So accumulate more shares. I'm not telling you accumulate more shares, but I myself accumulate more shares here in this area, because that's going to be lifetime opportunity for me. Look at that. When Facebook hits here, it doesn't get back to here. When it hits here, it doesn't get back to here. Even after COVID crash, look at that. What happened to the price? From 183, it goes all the way up to this 375, right? So right now, even after this crash is coming to here tomorrow, so 250, 249, 250, that's going to be amazing opportunity. So I'm not going to the daily or weekly, because this correction, we need to go to the bigger chart to see what is in bigger scale, and this is the area that I'm looking for to buy. Not just panicking, not just selling. This is a great area. And Amazon is coming tomorrow as well. So I'm not sure what is going on with Amazon, but if something happened with Amazon, I'm gonna just provide another video for you as well. Okay. So hope this one works for you. Hope this one is helpful. Have a wonderful trading days. Just trade safe. Just make sure that don't over allocate yourself in your portfolio just because it is good business, it is fundamentally undervalued. Don't go with 100% your allocation or so. Just go with 5 to maximum 10% of your portfolio in Facebook, and that is enough. If that one is going down, so you're gonna just hit probably like, I don't know, 10% of your portfolio is gonna be influenced, right? So this is the trading and investment rule. So don't over allocate yourself. Find out a good business. Take advantage of the negative sentiment. Okay. My name is Ali Safi. Here is the Safi Financial Network. We have got a Telegram group. If you want to get more insight, please join us in our Telegram group. If you like our videos, please give us thumbs up. Subscribe to our channel, and lots of good videos and materials are coming soon. Have a good one. See you on the chart. Bye bye.